Hello, ladies and gentlemen. Greg Michalowski from Forexlive.com. This is the weekend look going into the new trading week starting February 19th for the New Zealand versus US dollar from a technical perspective. So let's get started. I'm going to take a look at the 4-hour chart here. And what I want to point out is this whole range right here. This whole range goes from about 0.60369. So let's call it 37 up to 0.6173. So that's about 137, maybe 8 pips from the high to the low. Now, this is a 4-hour chart, so this period encompasses around 5 weeks of trading now. And that's a pretty long time to be in a fairly narrow range of that magnitude. Going back, if you were to take a look at any other 5-week period, 1, 2, 3, 4, 5, the range here was much bigger than that range, and then this range was obviously much bigger than that. Anyway, you get the idea. So when that happens, the market is unsure of itself, and you can see that in the ups and downs. Of course, in this period here, we had a down, we had a up, we had a down, we had an up, down, up, and we're ending the week really near the highs of the day, maybe just off of them, but closer to the highs than they are to the lows. So I know there's lots of ups and downs. What do we do significantly from a technical perspective that might tilt our bias one way or the other, so on and so forth. And if we take a look at the rotation to the downside here, the initial move to the downside, we did get below some key levels here. So the sellers had their shot. The first level is this swing area. I'm going to get my arrow here and outline the different times that the price either bottomed or topped at that swing area going back in time. All these levels through here, here. Yes, we traded above and below the area, but there's a number of different bars where the price stalled in that area and either reflected or deflected, however you want to think about it, away from the yellow area. So that's what I call a swing area. So we fell below that. We also fell below this green line right here and this blue line right here. The green line represents the 200-day moving average, and the blue line represents the 100-day moving average. And as you can see, we'll talk about this in just a little bit, but the green line and the blue line are pretty much converged, aren't they? So that's indicative of a non-trending market, of a market that's been confined for a number of different weeks near the middle of what is been the range from this low to this high over a longer period of time. And you can see that as well by looking at the 50% retracement of this move to the upside. So not only on Tuesday when we had the CPI data and we saw the dollar move higher, not only did the price move below the swing area, move below the 200, 100-day moving average, also below the 50% retracement. So all those things were working in the seller's favor, but it could not go anywhere. We could not keep the momentum going, I should say, to get to the low prices from the previous week. And we started to rebuild. And once we got back above this cluster of technical levels, what do we do? Of significance to me is that we based against the moving averages here. We got above the 50% retracement and based against the moving averages here and moved higher. And then what do we do subsequently? Well, we moved up above this 100-bar moving average on the 4-hour chart, which is moving sideways, by the way, and then came back down. What do we do again? We based against the swing area right through here. So there's a bullish bias off of the cluster of support, 50% retracement, 100, 200-day moving average swing area. And this area is going to be a key barometer next week and going forward. As long as the price can remain above this area, the bias remains more to the upside. If we were to move below that level, then the bias would shift back to the downside, and we'd have something like this where we look toward these levels on the downside. First the trend line, then the low price from not last week but the week before. Then we'd start to look toward the 61.8% retracement. That level comes in a nice little round number, 0.6000. So that would be that makes this area right here a break below that level. Those are the targets on the downside we would look for, and we'd look for even more, maybe even more of a move. But it depending upon the momentum that we have going on in the market. So that's the downside. But right now the buyers are more in control. Now, what do we have to look forward to on the upside, and what levels are also in play for the buyers? And we know that the price moved away from this area, so we know this area is a risk level. We also could say that the 100 bar moving average 4-hour chart is going to be a close support level. If the price could stay above that level, it's more bullish. On the top side, you see this trend line right here. I put a trend line down here connecting lows, and trend line up here connecting the highs. That trend line also corresponds with and close to the 38.2% retracement of the same technical move for the upside right through here. So that broken 38.2, it corresponds with the 200 bar moving average on the 4-hour chart. So we have the trend line, the 200 bar moving average, 38.2% retracement. Guess what? Get above that level, and also the swing level right through here. This is a minor swing area level, but it's over the last 5 weeks of trading. So important to get above that level, and we open the door for further upside with the high price from the 5-week period at 0.61734, another level to get to and through to open the door to further upside momentum. So it's clear that we're in an up and down market. It's clear that the 100, 200 day moving average, 50% retracement swing area is a key barometer for next week. It's clear that we're above those levels. That gives us a more bullish bias. The question is, can we continue that momentum in the direction to the upside, get above the other targets on the top side, including the 200 bar moving average, 38.2% retracement, and the trend line? If we can do that, then it opens the door for further upside potential. That's my technical look at the New Zealand versus US dollar as we head into the new trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.